Welcome back to a Global Business Report. To a commodities market now, oil prices lost ground today on doubts over future demand for crude, U.S. China trade deal uncertainties, and the health of the global economy. During morning trade, crude futures were down by 0.53% at $58.28, while Brent crude fell by 0.53% to about $63.63. Joining me to discuss both the international and domestic commodities, the market is Temitope Olugbile, an analyst at Financial Derivatives. Temitope, it's good to have you. Good morning.
Good morning. Thank you for having me.
All right, so let's start with the domestic commodities here. So what are the current price movements telling you about the food commodities like palm oil, yam, sugar, wheat meal, or semovita, as we call it?
Okay, so domestic commodity prices right now, you know that it's a month to Christmas, so there's increased demand for certain commodities. So we take rice, for example, which has been affected by increased demand, but you know the supply shortages caused by the border closure. So we have that, you know, to a high of at least of 27,500 for a 50 kg bag of rice. And then we also have that beans is about 15,000 naira. That's flat between last month to what we have this month. We have that, you know, Gary too. Gary has increased too. So those are some of the domestic commodity prices movements. And we've seen that, you know, the border closure has affected rice because we went from what, 18,000 naira for a 50 kg bag. So now we are at 27, looking at 30,000 naira for a 50 kg bag. And even beyond the inflationary impacts, we saw that from the GDP report of today, we saw what it did for trade. Trade, you know, the trade growth slowed. So not only is it having an inflationary impact, we're also seeing a slowdown in trading activities, even though we saw, you know, the agri sector improved, you know, so that some could say, you know, is having a positive impact on, you know, agri sector growth. But we've seen the inflationary impact. Inflation as of October was at 11.6%. So
Indeed, Temitope, but one would have thought by now that once there's an increase in local production of these items, as we've just mentioned and analyzed, there should be a corresponding, you know, a decrease in their prices, but the reverse is what we're seeing. So what do you make of that development?
So I think the thing is, you don't just expect your domestic supply to just increase by magic. You know, they need incentives. There are, you know, there are infrastructure problems. There are lending credit problems. So it's not just going to, the supply is not just going to increase because you've cut off the competition and you've removed the, you know, small goods supply. There needs to be incentive for these farmers, you know, to boost the production. So what you're having now is there's increased demand, but there's not a correspondent increase in supply for locally produced rice. So there's a time lag. There's things that need to be done to incentivize these farmers. I think that's what's happening.
I would still like us to focus on the domestic aspect of all these commodities. Talking about cement now, okay, fine, away from food for the time being. What's your assessment of this? We hear it's like 2,600 naira or 700 naira to one bag. So how would you assess that?
So we've seen that the price of cement has actually increased. And, you know, one thing to note...
I'm sorry, is it a phenomenal increase or just a marginal one?
No, I think it's just a marginal increase. It's nothing, you know. So one thing to note about, you know, this year is the fact that we've had rains for, you know, way longer than normal. You know, the climate change has really affected our, what we used to know as rainy season and dry season. You know, we're having rains in November and, you know, up until maybe like a few weeks ago, it was heavy and, you know, intensified rainfall. So of course that affected, you know, construction activities. But you know, as we enter the dry season, or what we know to be the dry season, you know, we expect the construction activities would increase. That would increase the demand of cement. Obviously, cement is a key part of construction, and we expect, you know, increased demand is increased prices, right? So cement prices could increase further, and that's, you know, bad news for the builders.
It is a worrisome trend because, you know, also the real estate values will also go up in that regard. So in view of international markets on pricing in terms of agriculture, how would you assess that narrative? What are your outlooks for that?
Okay, so we'll start with cocoa because I feel like there's some interesting parts of cocoa, and cocoa is a main export for Nigeria.
True.
So what we've seen with cocoa is that it's been up 12% year to date, and we've seen that there's increased collaboration among the cocoa producers. So Ivory Coast and Ghana wanted to start this cartel of, being able to control prices, and that is basically the cocoa producers are smiling to the bank because there's increased collaboration. So we have Ivory Coast, Ghana, and of course Nigeria. They're key players and they're key market price leaders for cocoa prices. So we expect that we expect more collaboration, and cocoa prices will continue to increase, which is very good for Nigeria's exports, export revenue. So we go to the grains, wheat and corn. So we've seen that wheat and corn, with them, just like oil, they are reacting to the U.S. China trade negotiations and the stall and the lull in trying to reach a deal, and the next tariff deadline is mid-December and there's still no deal. There's still a law in the markets are there's too many uncertainties. The market is not sure what is even happening between both countries, and so that's what is going on with wheat and corn, and those are really their key import commodities for Nigeria. So if we see the uncertainties is kind of driving them down, but which is good for our import bill for now. So we can rest while the uncertainties are driving our key import commodities down. And then for sugar, we've seen that the USDA is projecting a decline in U.S. output, and that's not surprising because there's increased health awareness of the adverse effects of sugar. So of course and if there's a reduction in supply, that would lead to an increase in prices, which is bad for Nigeria's import bill because we import a lot of sugar too. Yeah,
you're right. You're right about that. But I'd just like us to go back to the issue of cocoa, which is a prospective crop for export here. Now, Ghana, not too long ago, got some international incentives in terms of loans to develop their cocoa industry. So are we witnessing any of that scenario with Nigeria? Yes, the enthusiasm is there to make sure we can boost our production, but are we getting any help elsewhere?
So one thing to note is that Nigeria is trying to reach for an export level of 240,000 tons.
Okay, there is a target here.
Yes, there's that target. So we're trying to reach for that. And, like you said, to do that, we need, incentive. The cocoa farmers need incentives. Fine, the increase in prices is enough incentive for them to, play in that market and increase their supply to that market so they can cash in on the increased prices. But if the one thing is the willingness and the ability to increase, this output. So if they are willing, but they don't have the ability, they don't have the incentive, the need. Credit is a problem. Infrastructure is, suboptimal. That is not going to. Their export targets will just be a target and may not be met. So yes, we need incentive, just like Ghana had, and that's why Ghana can even think about, collaborating with Ivory Coast to be a cartel for cocoa prices. So yes, we definitely need incentives in that space too.
And that protecting the market, as it were. Yes. All right, Tope, let's have a look at oil markets now. How stable are current prices? If we take a look at specifics here, Brent is down 0.53% to $63.63 per barrel as it were. So what do you make of this scenario?
So oil prices is forever a burning issue.
It is.
So oil prices have been trading between $61 to $63 per barrel this week. And like I said earlier, it's one of the commodities that is reacting to the uncertainties around the U.S. China trade war. But one thing with the oil markets right now is that the market is awaiting the OPEC meeting, which is upper week, December 5th and 6th. So the market is awaiting that. And OPEC is going to have a lot on its plate to chew on at that meeting, because there are talks of, while the global recession fear is kind of easing, we've seen some countries dodging a recession, we've seen U.S. yield curve no longer inverted, there's this fear of an oil supply glut in 2020, because we have, on one hand, the rising U.S. shale inventories, and then we also have the slowdown, the projections of a slowdown in oil demand. And so OPEC wouldn't want a situation, that's why they even came up with these production cuts and quotas in 2016, because of the supply glut. So they don't want that to happen again. So the market is anticipating a deeper production cuts across board. And one thing, how this will affect Nigeria is that because they do not want a situation of an oil supply glut, they might really come down on countries that are not complying with their quotas. Nigeria is currently 6.5%, about 6.5% above its quota. So OPEC might really clamp down on non-compliant countries, and if we have a sanction because we're not compliant, and we also have that our production quota is further reduced, that would really have some negative impact on our fiscal deficit position. Yes, so that is definitely what's happening in the oil market.
So we need to watch it on that level. Very good. Now, just a one-off question here. Now, the biggest IPO, Saudi Aramco, is also on the plate here, despite all the uncertainties we have every now and then in the oil industry. So how is that likely to impact, the fortunes of the market, as it were? Yeah,
so, Saudi is about to launch what is said to be one of the biggest IPOs in history. And because of this IPO, they are advocating, they are pushing for higher oil prices, because that would be good for the listing. So that is definitely good news. And OPEC is, some might say OPEC is pretty much Saudi Arabia, it's driven by what happens in Saudi Arabia. So obviously if Saudi Arabia is clamping down and really pushing for higher oil prices, that's one of the reasons that the market is expecting that OPEC would deepen its production cuts and quotas across board. And if that happens, prices would increase. And so that's good. That will be positive for the market. That will play positive for the market. Very good. Now, you've already mentioned the narratives concerning all of this, but what do you think the outlook would likely look like, briefly? So the outlook for OPEC? Or OPEC, the oil industry as a whole. Okay, so between now to OPEC meeting, it's going to be the market will anticipate further deeper production cuts, which will drive prices up, So that is between now to OPEC meeting. After the OPEC meeting, obviously, it will be based on what OPEC, decides. So if they decide for deeper production cuts, prices will continue to increase. And, if they say, which is the possibility of them saying, no more production cuts is really slim. It's really slim. So after the OPEC meeting, the market will react based on what the outcome will be, which right now the probability is high that they would deepen the production cuts, and that would keep prices above $60 per barrel. So that is good news for Nigeria. Indeed, and also to add to that as well, hopefully the issues in Iran and the U.S. won't affect it on the long run. All right, Temitope Olugbile, Financial Derivatives, many thanks for your thoughts. Good to have you, as always.